As the Monetary Authority of Singapore does not set interest rates for the country, Singapore imports our interest rate mostly from the USA. The Federal Reserve has done a 25 basis point interest rate hike, and this has an impact, directly or indirectly, on our money. The banking crisis in the last fortnight is probably making many people think twice about spending money. Now, with the Fed's latest decision to hike interest rate again, the wealth effect remains in play. People will spend less money when they feel less well off. The Federal Reserve has been trying to rein in inflation by raising interest rate. The Fed funds rate influences consumers' borrowing costs. USA remains the largest economy in the world, and if their economy goes into a recession, Singapore, being a very open economy, will be impacted negatively. In USA, credit card annual interest rates are over 20%. Americans are rolling over credit card debt as the persistent high inflation in the country bites. Americans are feeling increasingly worse off financially, and many are buying even daily essentials on credit, while only making the minimum payment monthly. As for housing loans, the average rate for a 30-year, fixed-rate mortgage is at 6.66%, much higher than what we have in Singapore. Many homeowners have mortgages on floating rates and bought homes when interest rates were very low. They are having a harder time servicing their mortgages now. This issue is not unique to the USA, as many homeowners in Australia have the same problem. Americans are also increasingly priced out of car ownership as the prices of cars are also rising. Add rising interest rates on new loans, car ownership has become a huge burden. In a vast country with an arguably inadequate public transport network, cars are a necessity to most Americans. The average interest rate on a 5-year new car loan in the USA is now 6.48%. Borrowers are struggling more than ever to keep up with bigger monthly loan payments. Although the USA is very far away from Singapore, we should not think that American consumers will not affect our economy. After all, it has been observed that consumer spending is the single most important driving force of the US economy. If the American consumers falter, so will the economy.